Were you aware that prominent investor Cathie Wood just revealed a significant update about Tesla's Q3 plans? Experts predict that Tesla has a long but promising future. The majority of them firmly believe that Tesla is making efforts to hold onto its top spot in the EV market. Keep an eye out and stay tuned for additional information about Tesla's ambitions. Businesses must ensure that they follow plans as closely as possible, even though things don't always go as planned because unanticipated events almost always interfere with them. Nevertheless, big businesses like Tesla carefully create plans and make sure they are carried out. You can see Cathie Wood reveal this important information regarding Tesla's Q3 plans in today's video. Some claim that Tesla is likely to have its best quarter ever in Q3, with the company's highest ever month of vehicle production occurring in June 2022. Over 305,000 Tesla vehicles were produced and over 310,000 delivered in the first 3 months of 2022. On the other hand, the corporation produced and delivered more than 254,000 automobiles in the second quarter. Tesla attributed the drop in delivery and production to difficulties following the closure of its Shanghai manufacturing. Nevertheless, the business claimed that June 2022 was the greatest month for car manufacturing in Tesla's history. The number of vehicles produced in June was not disclosed by the EV firm, although it is believed to have been in the neighborhood of 120,000. With its Berlin and Austin facilities bearing the most weight, Tesla can easily accomplish its best quarter ever in terms of output in Q3 if it maintains this high production level. The fact that Cathie Wood is positive on Tesla is by now widely known. Tesla is one of Wood's top holdings. Wood is the manager of ARK Invest funds, which include the ARK Innovation ETF. When talking about the investment philosophy underpinning Cathie Wood's wildly successful ARK Invest Asset Management Fund, words like disruptive innovation and convergence frequently come up, and these concepts are arguably connected to Tesla. Actually, Elon Musk's Tesla business is receiving a lot of support from Cathie Wood-led ARK Invest. It should come as no surprise that the stock accounts for a full 10% of the fund's capitalization. When it comes to investing principles, Tesla meets a number of Cathie Wood's requirements. In fact, Cathie's involvement in the form of an open letter to Elon Musk in 2018 kept Musk from repurchasing Tesla stock and reinstating the business as private. The letter proved to be something of a phenomenon. It had a 5-year bull thesis for Tesla shares, with Cathie Wood projecting a price of $4,000 for the company by 2023. In his early stock repurchase program, Musk was content to pay just $420 for each share at the time. If you look at the sales growth over the last 5 years, it has compounded at a rate of about 48% annually, and you may remember that during a period of significant controversy surrounding Tesla. Depending on whether you take our bull or bear case, our prediction for the next 10 years is between 50 and 60%, adds Cathie Wood. Separately, Tesla intends to break through the capacity of the Cato pilot line near the vehicle factory in Fremont, California, by the end of the year and begin production of 4680 battery cells in the Texas Gigafactory this quarter. Tesla manager Drew Baglino clarified this at the analyst conference pertaining to the most recent quarterly results. The pilot line's current production of 4680 cells is insufficient to produce 1,000 automobiles each week. Getting the production process for the new technologies, such as the dry electrodes, under control remains a difficulty. Nevertheless, Tesla reaffirms its intention to start producing 4680 cells in Q3 with a focus on Texas. We built our first test vehicles with Texas cells by the end of the line, and the cell equipment was fully installed and commissioned last quarter, Baglino stated. We want Texas to begin production this quarter, and by the end of the year, we think Texas will be able to outpace Cato's weekly production. Located on Cato Road in Fremont, Cato is the location of Tesla's current pilot line. This building is commonly known as Terra. Tesla is constructing a standard range Model Y, which is exclusive to North America, at the recently launched Giga Texas. This model will have structural battery packs and 4680 cells. Still manufactured there, the Model Y long range, on the other hand, most likely still uses traditional battery packs, with the smaller 2170 cells. Tesla claims that it is independent of the advancement of 4680 production in Texas and California. According to Elon Musk, Tesla has sold enough 2170 format cars to cover the entire year's worth of vehicle production. He emphasized that, rather than now, this year, the 4680 cells will become significant in 2023. Be constructed in Kansas. In Chinoa, Samsung SDI is constructing a 4680 pilot line. Serial manufacturing is expected to begin in Malaysia later. Regarding Tesla, what are your plans for the near future? Tell us in the space provided for comments below. For more of this stuff, don't forget to hit the like and subscribe buttons. Now that the third quarter is more than halfway over, investors in Tesla have a better understanding of how the company's electric vehicle deliveries may be going. Any forecast at this point, though, should still include a healthy dose of caution. In China, the location of Tesla's factory with the highest output, uncertainty is still very high. It should be highlighted that the primary factor preventing Tesla from producing at its current rate this year was the operational limitations imposed by the government in accordance with its zero COVID policy. These days, a heatwave-related power outage is endangering industrial operations and possibly upsetting the company's supply chain. Investors can still attempt to project a rough range of delivery receipts for the quarter, though. More crucially, a detailed examination of Tesla's operations still paints a positive picture of the firm's growth prospects for Q3 and beyond, notwithstanding the ongoing uncertainty the company faces. While it's challenging to forecast with precision where Tesla's quarterly deliveries will land in Q3, one thing is for sure: significant year-over-year growth is probably in store. It should be noted that although there was either a temporary shutdown or restricted operational capacity at Tesla's high-output factory in Shanghai for the majority of the quarter, the company's second quarter global deliveries climbed by 27% year-over-year. Given these limitations, Tesla's ability to increase worldwide manufacturing at this rate is indicative of the company's momentum. Additionally, Tesla reported that its Shanghai plant achieved record monthly production levels as Q2 came to an end. All things considered, it's possible that the manufacturer has already manufactured a sizable number of vehicles at the factory, even though potential power limits pose a threat to Tesla's manufacturing rates over the remainder of the quarter. Furthermore, during Tesla's earnings call for the second quarter, management expressed optimism regarding the company's potential for production expansion in the second half of 2022. As Cathie Wood points out, there are 4 entrance barriers that appear to have increased in Tesla's favor. These are also important points to note. Battery technology comes first. With the exception of a few in China, Wood claimed that Tesla is the only automaker that has chosen to ride the consumer electronics industry's cost curve. This is a result of the batteries used in cell phones and computers changing. Because of this, even though its current cost is lower, its battery pack system is still substantially less expensive than that of other automakers. According to Wood, the other manufacturers will lose money on their electric vehicles, while their gas-powered vehicles will fail if they try to compete with Tesla. The artificial intelligence chip, which is all about autonomy and is only being used by Tesla, is the other entry barrier. Wood claimed that their analyst James Wang, who spent 8 years working at the artificial intelligence giant NVIDIA, was astounded by the specifications of Tesla's semiconductor. According to Wang, Tesla is 4 years ahead of all other automakers in terms of available semiconductor technology specs. The fact that Tesla has amassed billions and billions of kilometers of actual driving data presents the next obstacle to entry. More corner cases than any other firm exist for Tesla to train its systems, according to Andrew Carpathy, the company's AI director at the time. Wood claimed that since Tesla already has over 1 million robots, including her Model 3, roaming the globe gathering data and reporting it back every day, other competing businesses will never be able to catch up. Over-the-air software upgrades are another barrier to entry, according to Cathie Wood. She revealed that she bought her Model 3 in 2018 and had never had to take it in for service. She finds them surprising. Tesla is a transportation industry disruptor that may be included in Cathie Wood's playbook. ARC looks for trailblazers and those who are revolutionizing their industries. Not all EV companies are in town, even if Tesla is. As a matter of fact, there is fierce rivalry from all directions. However, it is the one setting the pace for its competitors in the race and leading the pack. Check out our other videos on our channel for more information about Tesla stocks.